Welcome along everybody, and thanks for joining us for our video series. Today we're going to talk about tax issues of residency as a result of the COVID virus. A lot of people are obviously now being forced to stay out of their country of residence, return to Australia for Australian expatriates, and that's obviously going to pose some life issues, but it's also going to impose tax issues upon you. So we're going to try and cover that and try and give you some peace of mind in these worrying times. As always, we have to start with a disclaimer just to remind you that particularly when it comes to residency, it very much depends on your personal circumstances. You need to get appropriate individualized advice. So please contact us. We'll be more than happy to help you and give you that guidance that's required. But just bear in mind that you can't rely on anything generally when it comes to tax and in particular residency. The first thing to discuss is probably, are you actually in fact a non-resident at the moment for Australian tax purposes? And this is something that our company has a great experience in, and I've put up the main issues here. And the first one is you had to have intended to be permanently living overseas. Now there is no formal guideline here, but the tax office has stated that it believes 2 years minimum intent overseas is its measure. That's what they define as long term. So as long as you're feeling that you're going to be over for that long period, then you should be okay. You also must have a visa. You can't be on a tourist visa and claim to be a resident living in a country. You must have had an appropriate long-term permanent visa in that country. You must have had a place of abode, not necessarily owned, but you just have to have somewhere that you call home in that country. And these are some of the things that would obviously support any argument to the fact that you lived overseas. It'd be very evidentiary. You'd have moved over with your career. You'd likely have taken your family, although that's not as essential as it used to be. You would have taken your belongings and you would be structuring your life in that new country. All of these things would generally mean that you are non-resident for tax purposes, but as I always say, check and see with your circumstances. But assuming that you are, the big issue is, has COVID forced a change on you? Now myself, I live in Singapore, but I came back to Australia and I've been stuck here now because as at today, in late March 2020, the airports are closed, there's travel restrictions, no one can move anywhere around the world. So I'm unfortunately stuck in Perth, but what a good place to be if you have to go through a bad situation. Now, if you've come back, whether it was planned or unforeseen, that's going to be a big issue. But the key thing is it a temporary return? Or had you already relocated? If it's temporary, that isn't necessarily going to affect your change. Now, they're going to look at things like, are you working remotely from your original country of residence? Have you got short-term accommodation? Is your family with you? Are you staying with family? What did you do with the kids? And then of course, you want some supporting evidence to justify the fact that you're only here on a temporary basis. And the best form of that is communication. Things like emails with your employer saying, hey, I'm in Australia, I can't get back. I'll just work here until the airlines start flying again, etc. Things with your spouse, talking about the temporary issues of how you're going to cope, put the kids in temporary schooling, homeschool them, whatever the case may be. Family issues, letting your family know that you're back here for the duration, etc. All of these things, and communication with friends are vital. Now, the truth is, you're probably already thinking these things and likely discussing these things with your friends, with your family, with your spouse. The trick is to make sure that it's evidenced through a formal communication. If you ever do get questioned with residency, it's likely to be many years down the line that they ask you these questions. And trying to say that you had the conversation is nowhere near as strong as evidence of an email saying there was that communication that proves what my thoughts were, my actions and my intentions at the time. So can't stress the importance of that. Now, if you are a non-resident, what does that basically mean? Well, even if you're back here on a temporary basis in Australia, you still will only be taxed on your Australian source income. So overseas salary would not necessarily be taxable. You'd only be hit with tax on your Australian property rental as you would be if you were living in or out of Australia any time. Your salary would only be if it was generated from an Australian source and performed in Australia. So if you were just doing incidental work to your existing role in Singapore or any other country, it would not necessarily become taxable if your residency has not changed. So as long as you remain a non-resident, your offshore salary would not be taxable. It would be called non-assessable income. You will not get a tax-free threshold. Unlike Australians living in Australia, they can earn up to $20,000 tax-free. As a non-resident, there is no tax-free portion. So any of these Australian sourced incomes would have to be paid tax on from the first dollar of taxable income or profit. And you would not need to include any overseas income, including income from interest, dividends, capital gains, etc. Only Australian source income would be necessary. A non-Australian salary overseas, not subject to tax, non-assessable. Australian share investments, as a non-resident, even the fact that you're physically in Australia for a period of time, would still remain capital gains tax-free and income tax-free. So you wouldn't have to worry about tax implications there, and nor would you have to worry about your overseas investments. They're all tax-free too. If you are non-resident though, Australian shares do come with a thing called a franking credit, which is a credit for the tax paid by that company before it pays the dividend. You would have no entitlement to that as a tax offset, which is refundable for some Australians if it's more than the actual tax payable. But as a non-resident, you don't have that benefit. And of course, if you earned any Australian source interest, you would still be subject to 10% non-resident withholding tax because your residency hasn't changed, you're taxed as a non-resident, nothing is changing until that residency actually changes. Now the key is, when would that happen? When would that situation go from being non-resident taxable to resident taxable? I think the key thing is when your intention changes. So when you believe you've gone, oh, I just don't want to leave, I don't want to go back overseas, I'm going to stay here forever. That's when things become permanent in your mind, that's when your intention changes, and that is also when your residency would change. You could have that evidenced by the fact that you may have terminated your employment by you resigning, or maybe your employer choosing to terminate you, or you sought a transfer to their Australian-based operations. You would obviously go back and cancel the visa in the country that you were formerly living in, and you'd also go and end your accommodation and start gathering up your belongings and shipping them down to Australia. You can see you'd also have difference in your actions and communication around the change. You would start to tell people, oh look, we've decided to live permanently in Australia, we're not going back overseas. So those things would also be very self-evident in how you present, how you talk, how you think in terms of your intention. When that does happen, obviously you become taxable in Australia as a tax resident. Now, importantly for that, it means that everything that you earn everywhere around the world is now subject to change. So overseas salary, overseas investments, in Australia investments, shares, everything now become taxable, but importantly, only from the date of change. So you don't have to pay tax on the previous money received prior to that residency change, only on income after that date. If you wanted to move any of your savings from country to country, that's never going to be subject to tax regardless of residency, but you can freely move your cash down from offshore to Australia and vice versa without any tax implications. Only if you had any interest overseas on that cash would you have to declare that as taxable. If you had superannuation or pensions overseas, you've got 6 months to transfer them down to Australia without any tax implications. Now, at the moment, the tax office is being a little bit mischievous in regards to some pension funds overseas and provident funds, where they're saying that if it was allowing for early cash in, other benefits other than retirement, they may not treat it as a pension. So you need to get special advice on this, and we can help you with that. If you decide to retain any overseas property, that will become subject to tax in Australia, and it'll only be subject to tax from the profits after the value on the day of residency change. So what you are required to do is get a valuation of what that may be, and only future profits would be subject to tax, not any past profits. In the same way, if you had any shares, both Australian or overseas, exactly the same situation applies, where only future profits are subject to tax. So any Australian shares, overseas shares, investments of any kind, you would obviously grab the value. Now with listed shares, that's quite simple. It would just literally be what is the value on the market. Right now, you could see that would be quite disadvantageous because as I present this, the share market is off 30%. So it's disappointing that if you had to come back and change your residency today, you would have been subject to future profits on that short-term reduction. So you want to monitor that and manage that as best you can. And of course, now that you're living back in Australia, I can't emphasize the importance of planning enough. Often when you're living overseas, you're in a tax-reduced or tax-advantaged lifestyle. Tax planning is not something you need to bother with overly. But now that you're back in Australia, it is a high income tax rate. It is a fair system, but it can be very, very high cost of tax on salary and retirement if you don't plan. So you should start to consider some planning, seek professional advice. We'd love to help you. And look at things like structures, family trusts, companies, etc., whether they're appropriate to your circumstance, superannuation funds, etc. And you should also look very closely at your debt management. The most important thing we always remind people is that when you're living in your home in Australia, ideally you want to be low debt or no debt. So if you've got some spare cash and you move into your family home, that could be the appropriate time to pay it off. Don't lose the loan, just clear the balance. And then that may be able to be feeding into some of your tax planning for later on. But overall, you need to start being aware of your environment because it's very, very different living in Australia for tax as opposed to living overseas. So if your situation has changed, we're here to help you and plan. Now, it's obviously a very troubling time for many expatriates around the world at the moment, but ATS has been doing this since 1995. We're the expat experts. We'd love to help you, work through all your changes, deal with the situation that has been dealt you, and get through this COVID situation as best we can together. So give us a call, give us an email, drop online to our website and make an inquiry. Hope that helps you out a bit. Health and happiness during this very, very unusual time, and good luck with your tax affairs.